Hello, everybody. Welcome back to the Decentralized Masters podcast, your go-to source for everything in decentralized finance. I'm your host, Tristan, and my co-host, Jon, will be joining me at some point today. He's just hitting some technical issues at the moment. We're here to guide you through the ever-changing world of DeFi, one strategy at a time. Every week, right here on the Decentralized Masters YouTube channel, we go live at 2 p.m. Eastern Time to bring you the latest insights, updates, and tools to help you in the DeFi space. So we had quite an interesting week, actually. I wasn't really expecting such a busy week, but after this whole Liberation Day thing, we have a lot of news to cover today, actually. So without further ado, I think we will jump into that. First things first, though, I wanted to give a bit of our usual crypto bubbles just to see how things are going currently, as in today. Right. Perfect. Let's make that a little bit larger so you guys can actually see what I'm talking about. There we go. Yes. So, bit of a down day on the market today. We're still we're still recovering really from that bit of mess that we had yesterday from the Liberation Day. But it's not too great down. Hype down 17%. Pepe down, Render down. Kind of a general down day in the market. We're seeing Vera down as well. Things were looking nice, before this whole Liberation Day thing. Market was actually up. We hit 87,000 on Bitcoin. But yeah, now today things are looking a little bit more grim. The week is also looking not great at the moment, and then the month as well. So not super good day on the market, but of course it's kind of expected. We kind of saw this coming. So not too great. But I will do my kind of general analysis to give you an idea of where I think we're going here. So I'm going to pull up my chart here just to show you Bitcoin here. I'm sure Jon will come in and do his own little TA, but this is just kind of what I'm seeing at the moment. So yesterday we had this nice candle, the one in white here. We had that 87,000, and things were, potentially looking good. Like that was a very confidence creating breakout. Unfortunately, during the Liberation Day announcement, we did come crashing back down. So there was lots of volatility at that moment. But yeah, we have come back down now. This is kind of where I see us going. Like as you can see here, last week as well, similar situation played out. We kind of got out of this, breaking out of this channel, this downward channel that we've been seeing for the last, I don't know, since January. We almost broke out of that channel. We were playing with our emotions. We had a few days above the channel, and then we broke down again. We picked up again before going all the way down, which was a nice sign. We didn't make a new low immediately, so that does give me a little bit of confidence. But yeah, this second candle was a bit of a play. Played at my heartstrings. Could we be breaking out of that? But no, unfortunately not. Broke down again. So this is what I'm kind of seeing. If we can get out of this channel and then we can hold above that 90,000, 92,000 range, then we can see, that continuation of the bull market, quote unquote. But we definitely need to go above that 92,000 level, just because it's so important. Like back in February, back in December, we would hit the 92,000 level and then bounce up. And so 92,000 became our support. Once we did break below it back in January, 92,000 became our resistance. So we hit it back in early March here, came coming and then came come crashing back down, and then every time we come to getting close to it again, we do fall back down. So a popular rule when you're doing technical analysis is that old supports, so 92,000 was our old support, has become our new resistance. So we do have to break that resistance to see the continuation of the uptrend, and breaking out of this downward channel would also be nice. Um, where I see us going potentially on the downside, uh, that 72 low 70 region still in play. As you can see, that was our old resistance. So back before the election, 72,000 was that level that we had a hard time breaking out of. So that old resistance will likely become our new support. And that's where we could go down if the current situation continues to deteriorate. Yeah, so that's kind of where I'm seeing Bitcoin at the moment. Let go to the Nasdaq real quick here. Just want to show you the Nasdaq because it also is pretty important. Meaning, unfortunately, with all the new institutional capital, institutional money that has been coming into the crypto market, it has correlated us. So what usually happens on the Nasdaq happens on Bitcoin. So you see this similar downward pattern in the Nasdaq that we've been seeing in Bitcoin over the last few months, and that's because we've become so correlated. One thing I made note of recently is that there is a really important support at the 18,400 level on the Nasdaq that we saw back in September and once again in June, and it was an old resistance back in the spring this time last year in 2024. So that critical level, I think we have the potential to come and bounce off of it again. As you can see here, we're getting real close to it. This might be the bottom of the Nasdaq, and then it would be that same kind of situation that we're seeing on Bitcoin. I want to see us break out of this downward channel and continue making a bit of an uptrend before I'm saying bull market is back on. But yeah, I think a lot of what we're seeing now is we're just kind of waiting for the Federal Reserve, trying to get some clarity on where interest rates are going in the May and June rate decisions. So yeah, that's kind of where I'm seeing us at the moment in terms of technical analysis. I do have a bit of a slideshow to show you guys today. Just going to focus on some of the most important news that has happened so far this week. And then I have a little bit of an educational segment for you. So let's get into that. First thing here, pretty important for all members who are listening and all our precious viewers. If you are involved in the FDUSD stablecoin, it could be wise suggestion to maybe move out of the token in the short term. There was a depegging incident yesterday where Justin Sun, founder of Tron, actually went on Twitter and announced that First Digital, so the company behind FDUSD, was insolvent. That they did not actually have the tokens required to back up FDUSD. For me to go a little deeper into that, for those who are fresh, who are new to stablecoins, who are new to FDUSD, you may have heard of Tether, so USDT. You may have heard of Circle's USDC. So those are the two, big stable coins in crypto. Those tokens are both fiat-backed stablecoins. So for every USDT token in existence, there should be one US dollar. So they either have that one US dollar in a vault, theoretical, or they have it invested in a bond, somewhere where it's very easy access. Same principle for FDUSD. This stable coin should theoretically have one US dollar in a vault or in bonds that are backing it up. And what Justin Sun has claimed is that that is false, that they don't have a one-to-one backing, that they have printed more FDUSD stable coins than they actually have US dollars in their, I guess you could say, system. So it did drop to, well, actually, I'll pull it up on Coin Market Cap for you guys, give you a bit of a more detailed view. Show you what happened. Cool. So, all right, we're looking at it now. So this is not what you want your stable coin to look like. You want your stable coin to look like this section back here. We'll go on a year view here. Monthly view. You want it to be between 99. See, it never really fluctuates out of that 99 range. It's always like 99.9, 99.98, 99.1, or it's like 1 point something or 1 point something something. It always is supposed to kind of stay in that range. And until yesterday, where it dropped down below 90. I think it went to 89 cents at the bottom. Go back here. Yeah, it went down low. So it was less of a stable coin and more of just a regular coin. Not very stable. You can see that we have pretty much recovered from there. It is now back at that 99 level. Apparently there was some redemptions. So there was a large. So what you can do with FDUSD is you can, on their platform, it says you can always go from their stablecoin, so FDUSD, you can always go through their platform and redeem it for $1 US. So there was a large player, I think it was Wintermute, which is a large company in crypto. They took $10 million worth of their FDUSD tokens they bought them at that discounted level of 95 or whatever it was. And they took it to FDUSD, their redeemable exchange, cashed it in for $1 and made, that 0.05% profit. But they did it with a few $1 million. So apparently they made like $3 million from doing that, just to prove that the reserves were still there. And so far, so good. It's not crashing to nothing. However, just because I love you guys, and I want to make sure that no one has to suffer another Terra Luna incident where your stablecoin depegs and you lose money, maybe not a bad idea now to swap if you had some FDUSD pool or something into something else, just to be on the safe side. Unless you like that risk. I know there's some degens watching this. Yeah, so back here, that's just something to be aware of. Another important thing, Circle, so the company behind USDC, is planning to go public on the US Stock Exchange. So it's planned to go live on the New York Stock Exchange sometime late April, early May is kind of what we're looking at. Circle has been making tons of money. Their business is very profitable, to say the least. Their main competitor, Tether, so the creator of USDT, they are one of the most profitable companies in the world at the moment. So because what their business is they're taking, just kind of like what I already explained with FDUSD. They have all these dollar reserves. So for every USDT in existence, there should be $1 US. So they take these US dollars and they put them into bond yields. So now they're basically collecting that 4.2 or whatever. I think it's 4% yield at the moment uh, on money. And since there's a few billion Tether tokens in existence, USDT. Now they have a US dollar equivalent that they're making money on at all times. So Tether runs a very tight ship. Apparently, they only have like 100 employees. So you have billions of dollars invested. You're earning 4% on that. You only have 100 employees. Pretty good business model. Circle has a few employees more. I think they have closer to a few thousand, just because they try to be a better regulated service. So they do work with like banks and institutional monies. So they do need more employees. They work with the governments just because they want to be audited. I know USDT Tether, there's always lots of claims that they don't actually have the reserves. But Circle is more, as you could say, more established, seems to be more trustworthy to begin with. And if they're going public, that is also a vote of confidence. When you're a public company, all your records are public. So anyone can go in there and do some digging. If anything was suspicious or not very, or if there were any cockroaches in Circle's business, they would come out once it goes public. So it's a vote of confidence for them to go public. I was actually a little bit suspicious when they first announced this, just because there's so many other stablecoin projects that are being created right now. Like FDUSD, there's a few hundred stablecoin projects going live. I know Trump's World Liberty Finance company, they're in the process of making a stablecoin called USD1. So there's tons of other stablecoin projects being put online at the moment. So I was thinking maybe this is the peak of their business, and all this competition will eat into their business model. But I had this conversation with our lead researcher, Tyler, from our group chat. From our private group. And he's a very intelligent guy. And he pointed out to me, as you can see in this chart below, that the amount of new funds that are coming into crypto right now that are going directly into stablecoins will definitely offset the balance of these new stablecoins being created. For example, that chart down there is showing USDC token. There was, I think, it was like something like $6 billion of new USDC created in the month of March alone. So yes, there's more competition coming online, but this new adoption and this new supply of money coming into crypto will hands down offset it. So he did change my opinion there. So it is an interesting IPO. Not something I'm rushing out to buy. This is a crypto channel, of course, so we stick more to crypto than stocks. But even there, so I'm not crazy about going out and buying that stock. Another little bit of news is Coinbase saw the worst quarter it has ever had, dropping 33% in Q1, which is odd because Coinbase actually performed very well. So if you actually read the financial statements on their latest reporting, they're making records on their total transaction volume. So the amount of money that is going through Coinbase right now, very high. They're making good money. So it is interesting that the stock is performing very well. I think the macro environment, so the interest rates, the downtrend in Bitcoin, the downtrend in the rest of crypto and your altcoins, that's kind of bringing Coinbase's stock down, regardless of how well the business is performing. So that could either be something to avoid or an interesting opportunity, depending on how you look at it. So yes, we had Liberation Day, and I did watch that yesterday live. It was a lot more bluster than the media made it a lot more hyped up than it needed to be. It was a lot of news that we kind of already knew. And then I'm also taking a small look at liquid staking. just because it's a question that we all often get from our members. So I just kind of wanted to explain it the best I can. I know it can be a little bit complicated. So here is my go at explaining it to you guys. All right. So looks like we have DeFi John joining us. Welcome, brother.
Hello, man. Came in at the perfect time, right?
Where did he come in? Reciprocal tariffs?
Yeah, man. I've been here the whole entire time. I'm
Oh,
just
I've just
messing
been
around with you.
talking about
I
stuff.
literally, you were just ending the FTX Coinbase. How Coinbase has had the lowest inflows, right? Since the FTX collapse. That's when I joined in. But how are you doing today, man?
Not bad, not bad. After Liberation Day yesterday, I'm not feeling that liberated. I thought I would feel a little bit better, but I'm not.
Yeah, man, I'm definitely looking forward to what you have here. Looks like you have a lot of good information. I mean, the good thing is now is that we have a lot to talk about in the market, right? It's a lot,
Yeah,
but also a lot of that noise is not reflecting because we've also seen a lot of positive into the markets. So definitely looking forward to what you have here with tariffs. Do we have an event going on tomorrow for the markets? Are we expecting anything, or was that it?
I think that's it for this week. There's not some. I don't think there's anything else really big this week, which is nice. After these tariffs, we're gonna have to sit and digest that for a little while.
Yeah, it's probably going to take us a while. I mean, we've been kind of almost spot on, man. I mean, we've been talking about how we were expecting some sort of volatility, mostly more downside in the next coming weeks. And so far, we'll see where things go. Really looking forward to it. I think there's a lot of opportunities. But if you guys are part of our private community, Tan and Salim mentioned today, we could be expecting a lot more volatility moving forward. And right now, could depending, it just depends on where you're at, could not be the time to start taking additional risk. And I totally agree. I think right now in the time in the market that we're in, we play it, I guess if you want to call it quote unquote safe, let all the noise go out, all the political tension go out, stack that USDC, USDT, do some lending, a little bit of staking, and then once everything starts to settle in, then start making a decision where you can start buying these assets. But a lot of these assets, I think, are going to bring in a big opportunity, man. So definitely looking forward to that. And definitely looking forward to what you have here.
Yeah, I'm quite excited. And this one strategy that I'm going to talk about today, liquid staking, can actually very much boost your potential returns here. But yeah, reciprocal tariffs, I'll just touch on this lightly. There wasn't too much that I have to say because it didn't affect crypto that much, well, besides Bitcoin. But tariffs will be added to all the countries that have tariffs already on American goods. So, for example, China had like a 97% tariff on any American goods coming into China. What the US did is they basically put a tariff on Chinese goods coming into the US now. There was about half that, so it was like 47%. So they did this with most of the countries in the world, European Union, Cambodia, Malaysia, Indonesia. I think Japan was on that list. Switzerland. Basically, every country in the world that has a tariff on U.S. goods coming into their country got slapped with a tariff from the USA, saying now your goods coming into our country will be tariffed as well. So that was kind of the main point of everything. How did that affect markets? Well, the DY, so the US dollar index did go up. So the strength of the dollar increased. And when the strength of the dollar increases, it has an inverse effect on Bitcoin. And that sent Bitcoin down. So when US dollar up, Bitcoin down. And when Bitcoin goes down, that kind of brings the rest of crypto down with it. So that was kind of the whole story about Liberation Day. Very uneventful for us crypto investors. Besides sending Bitcoin down, didn't really do anything else. Or yeah, not exactly relevant. So what my strategy is that I wanted to briefly talk about with you guys is liquid staking. You may be familiar with the process of staking or in this case, we're going to call it native staking. And that would be, for example, you can stake your Solana directly with Coinbase, and you can earn yield there. You can stake your Solana directly on Ledger Live through Figment. And then that is, I guess you would say, the most regular form of native staking, where you don't have access to your funds for a little while. If you want to unstake it, it takes a few days and then you get it back. But you earn a yield on it while it's being staked. Liquid staking is a little bit different. So when you liquid stake, we'll use Solana as an example again. You give your Solana to the staking provider, and they actually give you a token back. And this token would be something like M Sol or Jito Sol, or in the case of Ethereum, you would get ST ETH, which stands for staked ETH. That is, and then you can use that new token that they give you back in liquidity pools. So not only are you getting yield from the ETH that you staked on the platform, but you also get a synthetic token back, in this case, STETH, that you can use in liquidity pools. So you can then collect yield in two different spots. So you're collecting a little bit of yield from the staking platform, and now you can also collect a little bit of yield out there from liquidity pools. This does get complicated, so I'm doing my best to explain, so please follow along or ask questions in the chat. I can always double back and clarify anything. So the best place, or the most popular place to do liquid staking on Ethereum, is Lido. Basically, you send ETH to Lido via their platform. They send you back staked ETH or STETH, and that's at a 1-to-1 ratio. So STETH and regular ETH, they will equal the same amount. If Ethereum was $100, STETH would be $100. If Ethereum dropped $10, STETH would drop $10. Kind of like a stable coin. If the US dollar, the US dollar is always one, your stable coin, in theory, should also be one, unless, of course, you're holding FDUSD. Not funny for the people that are, but sorry. So staking awards on Lido, because it's ETH, you're shooting for that around that 2 to 5% kind of range annually. And that is automatically added to your STETH. So if you had 100 ETH staked, and then you waited, I don't know, a month, your STETH that you gave back would have actually increased as well. So that token, that STETH that you're getting, is also accumulating tokens. Sometimes that can be a problem, though. Some liquidity pool platforms like Uniswap, they don't like when the token that you gave them is accumulating. So there's another token that you can get from them from Lido called WSTETH, which is essentially the same thing as STETH. It's just that it won't, that number that you have won't increase over time. So it's, it basically, it just means it's more DeFi friendly. You can use it in more platforms. So keep in mind, STETH and WSTETH, essentially the same thing. There are other platforms that you can do for liquid staking, for Ethereum especially. Rocket Pool is another one. That one has 2.46% yield on ETH at the moment. Stake-wise, 2.8% on ETH, and Frax ETH, also 2.87. Lots of pools out there for Lido and Rocket Pool on our favorite platform, Beefy. Quite a lot of options. I had a harder time finding lots of DeFi options for Stakewise and Frax, but there were a few. You can also do liquid staking with Sol. So you can liquid stake with Jito Sol. Same principle. You send your Solana to the Jito network. Jito network sends you back Jito Sol, and then you can use that Jito Sol on different DeFi platforms. As you can see here in this image that I added here, this is a pool of Jupiter token and Jito Sol. and that was from Meteora. And at 0.10% interest a day, that is, it fluctuates, but 36.5% yield per year. So you're not only collecting that 7.7% from staking Solana on Jito, you would be earning 7.7 plus 36.5 from your liquidity pool, assuming that it doesn't fluctuate, but it will. Another good place is Marinade Finance. So same principle, send off your Solana, get MSOL back, collect 8.21% yield, and then you can use that MSOL on other DeFi platforms as well. Some other tokens that have liquid staking options include Polygon's Matic, Binance Smart Chain BNB, DOT, AVAX, as well as Cosmos's Atom token. There are others, but those are the big ones. The risks of liquid staking, the big one is bugs or exploits in the staking platform. Smart contract risk is the big one. And that's the same thing if you were in any liquidity pool. Smart contract risk is the biggest risk vector that you got to watch out for. There is some issues if the validators get slashed. Not common, not a very common issue that ever happens, but potentially it could be an issue. The tokens depeg. So if there's a reason for the tokens to depeg, maybe Justin Sun comes out again and says Lido is broke or Lido doesn't actually have the ETH, then that would be an issue. However, Lido is basically all code, so there's no people involved. There's no way for them really to be insolvent. So that is one thing you got to watch out for. But really, it's pretty solid. Just kind of smart contract risk is the main thing. So maybe don't have all your eggs in one basket. Maybe use Lido and Rocket Pool. A little bit of diversification. It can always help a bit. Yeah, but that's kind of my explanation here on liquid staking and Liberation Day. I know it's a little bit complicated, but I'm happy that you bared through that with me.
Yeah, liquid staking could definitely be a little bit tricky and a lot more advanced than just providing a liquidity pool, depending on what you're doing. But if you guys have any questions, check out our free community down below in the description. And if you guys are interested into joining our private community as well, link down below in the description, where we could go ahead and show you these strategies. You could go ahead and talk to Tristan, and he'll also walk you through on how to do that if that is something you're interested in. But thank you very much, man. Really appreciate that. Let's go ahead and talk a little bit about the market and see where chaos has been going into. So really interesting time to be alive, to say the least. So we're going to go ahead and start off with crypto bubbles. I'm not sure if Tristan already started it, but if you did, doesn't hurt to see it one more time. But let's go ahead and let this load up a little bit. But crypto bubbles all across the board. I'm pretty sure it's a little bit more neutral. There you go. See that daily. I knew how to change it.
Yeah.
The daily right here. Barra down 16%. Hype down 17%. So altcoins, meme tokens are getting wrecked, guys. So this is one of the main reasons why I've been saying, I like risk. I like altcoins. I love meme coins. But even myself, these last few months, I would say probably since early February, I stopped really loading up. I started to go ahead and stack USDC instead and just be patient for the market. But as you see right here, there will be a lot of buying opportunities. Now, it just all depends on your personal portfolio. Initially, I took on a lot of risk in the beginning, and because we all expected the market to jump by now, I actually did the opposite, right? So because I did take on a very initial aggressive risk into my portfolio, I'm deciding to go ahead and just wait it out. So I haven't really been doing anything too aggressively besides just stablecoin vaults or pools on Harvest. And that is one of the best ways, in my opinion, right now, where you can still be exposed to the market, but also don't have that downside risk to it. Now, if you're holding to Ethereum, Ethereum also has been doing some very scary numbers. To be completely honest with you, Ethereum hasn't been performing really well. But even if you are a holder of Ethereum, if you go over to Harvest, you could actually get a pretty nice return on that. They were offering 5% last time I checked. It might have gone down because of the market. But yeah, all across the board, as you see, we do see red, a little bit of green probably on the hourly. Yeah, we see a little bit of picking up. I wouldn't go ahead and make a decision based on this right now. Tomorrow will be Friday. You know, Fridays usually start to get very, very volatile. So I would personally, not financial advice, I would just go ahead and wait it out. Let this week go by. Be patient. Right now, the time that we're in the market, it's all a mental game. Like the game they're going to be playing moving forward, it's all going to be all about patience and how much we really want this crypto thing, right? Because there's actually a lot of positive news that I'm actually going to be sharing with you, and I'm sure Tristan also shared. But all across the board, as you see, a little bit of green picking up, which I wouldn't be too excited about. But one thing I do want to go ahead and show you, and I want to go ahead and get Tristan's input too. So we see Water and Avalanche went ahead and partner up to go ahead and bring in $20 trillion in commodities into the blockchain. So I've been talking about Avalanche for a while. Avalanche has been one of my picks early on. I've been, talking about how Avalanche has. Did I say Solana? Avalanche has this narrative of real world asset in gaming. And now we're actually seeing them partner up with another blockchain platform that brings commodities on chain. So this is all in regards to real world assets. It looks like they will be going forward with this. I actually looked a little bit more into Waters. I never even heard about Waters, to be completely honest. I'm not sure if Tristan has. Have you heard of Waters, man? I've never heard of Waters.
I like to think that I'm the real world asset man, the RWA guy. I've never heard of water.
Yeah, I was a little surprised. I was like, what the heck is a water? And I had to look it up. And I came across their website, and basically what they are doing, just like I broke it down, is just a platform that is helping those to go ahead and put commodities on the blockchain. Really that simple. I'm not even going to go ahead and complicate it. But if you guys would be interested into learning a little bit more about water, it's WATR.org. Be very, very careful when you're searching things online because right now a lot of scams are going all around the space in crypto in general. But you can go through their website right here. You can see exactly what they do. But it's really cool. I mean, I've been pushing how AVAX is an underdog in my opinion. I think AVAX is really going to surprise a lot of people, and we're seeing them make a lot of moves. Yet the price is not reflecting, right? So we'll see where things go moving forward. But it looks like they already have a few partners, some pretty big partners, as we see JP Morgan, Snapchat, Cardano, Shell, Paxos. It looks like they're actually affiliated with Paxos. So very, very interesting. They didn't even know that. See, you learn something new every day. But with that being said, it's pretty clear to see that Avalanche is taking this real world asset narrative very, very serious. Very excited to see where they take things moving forward. What are your thoughts about this, Tristan, with Avalanche? Are you surprised, man? Because let's be honest, Avalanche has been one of those that not only has been described as a dinosaur token, it has been underperforming. And then three, it also is not like the asset that's talked about in the real world asset. I feel like Ondo and all these other ones, Mantra, people are very excited about, but they're disqualifying AVAX when AVAX has actually been implementing a lot of this already into real world user case, whether it's gaming, real world assets now. What do you think about this, man?
Yeah, poor Avalanche has been forgotten because it's not the layer two that you first think of. Whenever you think of layer twos, the first thing you probably think of is Arbitrum, or you think of base now. So AVAX has taken that, that third place kind of level in your mind. And then on the real world asset front, you don't think of Arbitrum either. Sorry, you don't think of AVAX either. You think Mantra, you think Ondo. So it's neither top of mind in either category, but that doesn't mean it's not a good play, because if they are going out and they are making the right partnerships with Water potentially here, that is a good sign. And then as you can say, the results will show for themselves. If they start showing really good results, then it might be back in people's mind again at some point. There's also really good pools for it at the moment.
Yeah, I think Avalanche has had a identity crisis on what exactly is it that they want to do, man. It seems like they're still trying to figure out what their niche is going to be. But so far, I've been seeing a lot more into like the gaming side of things, real world assets. There's actually going to be one of the tokens we're going to be talking about that recently launched, Guns. I touched on it a little bit during Let's Talk Crypto, I believe. That is for all of our private communities, our private community members. But yeah, Avalanche has been doing a lot actually, and it just hasn't been reflecting. But that's usually how this plays out. This is how it plays out. You know, you hear good news about tokens, they don't do anything, and then out of nowhere one day they just pop, right? So always keep that in mind. This is one of the main reasons why we always mention not only do your own research when it comes to this, also understand what you're investing in. Because, for example, if you look at the price of Avalanche, you're like, this token's dead. But when you look at the infrastructure and what they're building, these guys are moving in silent. Literally, Trump just bought $2 million worth of AVAX. Like, does this surprise you now that we're seeing a partnership such as Waters that now they're looking to bring in over $20 trillion in commodities into the Avalanche chain, right? So there's little signs. When you start opening your eyes and start looking at these articles, it's not really to make a decision on those articles. It's more so you could go ahead and start putting puzzle pieces together. Because if we go all the way back to 2 weeks ago, we talked about how AVAX had this AVAX ETF. And then followed by that, we had Trump's venture capital buy over $2 million of AVAX. Then we started to see massive volume picking up on Avalanche. And then now we see this with Avalanche and a little bit of more good news, right? So it's always going to be leaving signs. Check this article out. So Shiba Inu price targets a 60% jump on Shibarium. What are your thoughts on SHIB, man? Like, I don't know what they're thinking, a 60% pump on SHIB anytime soon. I looked at the chart. It looks like looking at this analyst right here doing the TA, he's looking at this breakout happening right here. I think, in my opinion, as much as I love meme coins, we need to first see Bitcoin hold $90,000 before we start talking about meme coins. And I think second, we really need to see Ethereum pick up the slack that it's been having, right? We need to see Ethereum at least touch back to $2,000 because that's also been having a struggle. For me personally, those are the two indicators that I'm looking at before I start putting price targets on meme coins. And keep in mind, I love meme coins, but right now, I think in the time of the market, it's probably not the best investment in my opinion. What do you think about this, man?
SHIB's not going to lead the market.
Yeah.
If it does, I'll retire. If Shiba Inu is not going to be the first mover here, you could potentially see XRP being the first mover.
Exactly.
Here,
Yeah, I
but
think so too.
I don't see meme coins and especially Shiba Inu being the one to do that.
Yeah, the only time we'll see the
this guy's
meme.
getting a little affiliate marketing or something from this.
Yeah, something. Yeah, because I don't even know. I looked at the chart for SHIB and I couldn't see anything very positive to really point out besides the fact that it's down quite a bit, right? It's already down. Looking at its chart, it's already down at its almost near bottom back of 2023 before SHIB went ahead and took off and did a little nice. What is this return right here for us? It's a 3x. It's not too bad. But honestly, I agree with Tristan here. I don't think SHIB's going to be the one leading this cycle. I think right now we have bigger problems. And one of the biggest problems is Ethereum. Look at Ethereum at $1,700. $1,700. I was expecting, I've talked about this in the past. I can't remember what live stream we talked about this, but I mentioned how there's a possibility that Ethereum could go back to $1,200, $1,300, and that would be like a major buy zone. Like I'm buying Ethereum at those areas. I don't care what people say about ETH. I'm loading up on ETH if I start to see ETH at around $1,300, man. Like that's a must. You know what I mean? I don't think it hurts loading up on Ethereum. And one thing I want to go ahead and also bring to everyone's attention is if you've noticed all these real world assets, they're not happening on like Solana. they're not happening on like Sui or Say, right? They're mostly happening on Ethereum. Even Trump's venture capital their largest holdings is ETH. ETH is always going to be institutional interest for the moment until the next token replaces that, which could be Solana, could be Say, it could be Sui. There's a lot of competition. Right now, so far, Solana could be the next one. But as of right now, Ethereum has been here the longest, and institutional interest goes for ETH most. When it comes to developing and things like that, they would rather use the ETH chain because it has shown strength over all these years, as opposed to selecting an asset class such as Solana, right? So at the end of the day, people always complain about gas fees, but I also look at Ethereum as a whole different playing field. Ethereum playing field, it's like big money. Like they don't care so much about gas fees, right? That's why you still see Ethereum being the leader when it comes to on-chain data, when it comes to TVL and things like that. I'm sure that could change. I'm not saying it's always going to be like that, but as of right now, institutional interest would rather go for ETH than for any other token. So also keep that in mind. Now, Coinbase, this is pretty interesting. I thought Coinbase was done listing meme coins, but it seems like they're not. Coinbase announces 4 new altcoins to list on futures. So they're not just listing tokens, they're literally going to list high volatile tokens on leverage. So be very, very careful, guys. The tokens there are listing, it's called Nillion, Vine, which is a meme coin, Guns, and those are 3 tokens. I don't know what's the other one. They said 4. Maybe it was some clickbait, but I only see 3 tokens right here listed. But yeah, be very, very careful, guys. There has never been a moment where an exchange listing goes and with any token, this is not just Coinbase specifically. This is any platform with any token where they list a token and it goes up. It's usually the opposite. When a big major platform lists a token, it usually goes down. That's usually like the sell signal for like everyone in DeFi, so they could go ahead and start onboarding retail investors. So this is one of the main reasons why DeFi brings in a lot of opportunities, because you could be one of the first to get into these projects before they get listed on these huge centralized platforms. Because if you're just currently right now navigating in the crypto space and you're just using these platforms, these centralized exchanges, you're not really getting the full potential of all these platforms. And what I mean by platforms is a DeFi ecosystem. The DeFi space is really the area where you could go ahead and find those opportunities, such as liquid staking. You could go ahead and do pools to go ahead and farm. You could go ahead and do lending and borrowing. And also, you could also look for those next hidden gems that could go ahead and be listed on these major exchanges. What are your thoughts about this, man? Like Coinbase listing Vine. I mean, I'm surprised they still. At one point, they were never listing meme coins. Now it seems like volume is the main indicator now.
Yeah, everybody wants to be pumped up fun. They all saw the success from the pumped up fun platform. So for those that don't know it, it's a platform that's basically a meme coin platform. Super easy to spin up a meme coin. You can do it in an hour. So everyone wants to be pumped up fun. They saw there was a good business model there. Attracts a lot of attention. Part of the reason why I think they're listing meme coins now on Coinbase is for attention. It's for PR. It's a good way to bring in eyeballs. And when those eyeballs come in, maybe they'll start with meme coins, but eventually transition to more sustainable tokens. And then Coinbase will collect their fees on conversions. So yes, I understand why they're doing that. But also at the same time, if you're buying tokens on Coinbase, only Coinbase, you're not involved in those native markets where you're buying the tokens before they're on the big exchanges. You are behind the curve. If you're hearing about it while it's on Coinbase, because it's listing on Coinbase, you're probably too late.
Yeah, it happened with Shiba Inu when it got listed on Coinbase. That thing dumped. And like I said, it's not just a Coinbase thing. It happens to all the major platforms. The only token that I've seen, surprisingly, and I was very surprised, and to be completely honest, quite impressed, that didn't dump right away was Hyperliquid. Hyperliquid was the only one that I'm just like, damn, man, out of every token, most of them always crash. That's probably why it went well. Maybe a lot of people were shorting, expecting it to go down. There's a lot of buyer interest. But I mean, look at Hyperliquid now. It didn't crash then, but now it's definitely taking a bigger hit. There's been a lot of drama too with Hyperliquid, with what was going on between Binance. It looks like there's like also not only do we have a tariff war, but we also have an exchange war now, from what it seems like. Great time to be in these markets, in my opinion, especially the fact that we have more information to talk about. But yeah, that's quite interesting. I would not recommend buying those tokens. I do like Guns, and I'll talk a little bit more about what Guns is. Guns is definitely a good altcoin, in my opinion. It has just launched. It already dumped over 40%, but I'll let you guys know an estimate of what my key areas are for this token. And the thing I like about this token is in the metaverse sector. So we'll talk a little bit more about this. Tristan touched up on the FDUSD. Justin Sun went ahead and made a payment statement about FDUSD, which created a little bit of FUD and went ahead and dumped about 3%. Luckily, it has still slightly recovered from last I checked. But yeah, this is definitely something that we always want to be cautious when it comes to stable coins. That's why I personally always recommend stick to your USDT, USDC. These are the coins that have been around the longest. If you really want to go ahead and be a little bit more, if you want to call it the safer side, I would say probably stick to USDC, because I know USDT right now will start to get listed on a lot of exchanges, delisted. And the reason why is because they're not compliant with the European regulation, I think, or compliance. So USDT is going to have some of that struggling going there. We'll see how things go. But USDC is compliant and pretty regulated too as well. So they're going to probably be the what is it called?
Leader?
The dominator in the stablecoin, because it was definitely between USDT and USDC, right? USDT has made a lot more money than USDC, but it looks like maybe USDC will now be picking that up. And also because due to the fact that USDC is wanting to go public, you guys saw Tristan talk about that. So there's a lot of also wars with stable coins. Trump also talking about releasing his own stable coin called USD1, which we talked a little bit about, I believe, a few weeks ago. But I've definitely talked about it with our private community. But this is what Trump's team's trying to do, USD1, because they see that that's the business model right now, stable coins. Yeah, but what do you think is going to happen with USDT, man? Do you think USDT is going to still be around, or people are going to 100% completely not use USDT?
No, I think in the long run, USDT will be fine. It's only the main central exchanges that have USDT banned now. So you can't use it on Binance in the EU, or you can't use it on Coinbase in the EU. The EU is also regulating itself to death. So this is no surprise. The EU is they have so much red tape and regulations, it's ridiculous. But the rest of the world is still okay with USDT
For now.
for now. But then also DeFi is all USDT still works in DeFi spaces. So if you're using your liquidity pools or your any decentralized exchange like Uniswap, whatever, they're not restricted by the what is my word? I don't want to say stupid, but the stringent rules of the European Union.
I want to ask you a question with this. What is your preference of a stable coin, USDT or USDC?
Ooh, whoever has the higher yield.
Yeah, that's the right answer.
Yeah,
I prefer to use USDC most of the time. I don't know why.
USDC, yeah.
But USDC, I like USDC. I've noticed that also, like most of the time, like the at least the pools that I'm looking at, I've noticed that USDC usually offers a better yield than USDT. Sometimes, not all the time, because I was at a USDT Volt on Harvest about 2 weeks ago, and I think they were offering about 9 or 10% on USDT Arbitrum. But Arbitrum, I've noticed this. I've also noticed this as well, and I'm sure you probably have as well. It seems like a lot of these blockchains are kind of almost associated with like a primary stablecoin. Like for example, like when I'm doing base stuff, I tend to go more for like USDC. But when I'm doing Arbitrum, I don't mind either or, but I kind of go more for USDT because Arbitrum has some really good vaults and liquidity pools on USDT, and Base has better options for USDC on the Base chain. So it's pretty interesting. I'm not sure if you've noticed that, but blockchains tend to have like their own selective stablecoin that there's a more of a primary use to it.
Yeah, I've seen that for example on SWI, the USDT will often be it will often have higher yields than USDC. Interesting.
Yeah, pretty interesting. So let's get rid of this. We talked a little bit about this just now, how Trump's team's looking to go ahead and launch his own stablecoin called USD1, which would be pegged to the US dollar, backed by short-term US government treasuries and other US deposits. It would be great if it was gold. We'll see where things happen. I mean, if we could get some good, juicy yields out of this, I think we're in a very interesting spot. I mean, never did we ever imagine, at least me personally, that we were going to have a president that's going to be launching all these crypto-related products. And now a lot of people are a little bit in between, right? It's like, is this even fair? But what are your thoughts about this USD1, man?
USD1 should be interesting. Of course, if the yield on it is interesting, then maybe a portion of my stablecoin portfolio can go to it.
Yeah.
If it had gold backing, that would be very interesting because there was a gold project that I talked about. Not was it last week or the week before, where they were making a gold-backed stablecoin out of the country of Kyrgyzstan.
Oh yeah, I remember
So,
you said
yeah.
that. Yeah.
Yeah, so that could be like a revolutionary new type of stablecoin. But everything that is revolutionary seems to get banned in the EU. So I was going to add, so PAX G, which many of you are familiar with, a fan favorite of the decentralized masters community, is also now banned on exchanges in the European Union. So not only was it
Really?
USDT, it was also PAX G.
Wow. Well, the thing is
Can't
that
have
I
anything
noticed,
fun there.
the thing that I've noticed too is like with PAX G, like I don't know any platforms, like at least in the US, maybe crypto.com, that I know that you could buy them directly. Like I don't think you could buy PAX G directly on Coinbase. So it kind of almost leaves you to this like still this DeFi stuff because I'm sure people will probably be loading up more into PAX G if they had access to it through decentralized exchanges. But you do have to go through the hurdle, which is not really a hurdle. Like it's not a hurdle for me, it's not a hurdle for Tristan, but it could be a hurdle for you if you've never explored the space of DeFi, which could get a little bit complicated and a lot of steps to do it. But it's not easy for the average person that has no idea on how to navigate around this space into buying PAX G, right? I don't know any platforms. We'll look into it right now, see what exchanges have them. I'm sure one of these exchanges have them, but it's probably not an exchange that is in the US. I'm thinking probably the only one would be more than likely, I'm thinking crypto.com. Because crypto.com was one of the first platforms in the US that I've noticed that they listed a lot of meme tokens, a lot of like micro caps for crypto.com. And I always thought that was a good thing for crypto.com to do that because you got to keep in mind, like I understand the whole entire thing about not listing these tokens. These exchanges do not want to take the responsibility. But I think in my opinion, like I like the approach of like crypto.com where like they list almost any other token. And it's really up to you to decide what you want to buy. Like if you lose money, that's on you. You know what I mean? But you have other exchanges such as like, Coinbase, Kraken, these other exchanges are a little bit more careful with what they list, which is good because they're protecting their investors, right? They don't want to get that bad reputation of their customers losing money. But I think, in my opinion, in the space of DeFi and crypto, I think the biggest things I look for is not having those restrictions, and also being able to do whatever you want to do. You know what I mean? You're your own person to make your decision. If you want to buy Pepe and put all your money in Pepe, you shouldn't be stopped. I think that's where the decision to do whatever you want comes in with DeFi. And I think for me, that's definitely what always painted a whole picture for me when it came to that, is that you're in control of your own money. You can do whatever you want. And at the end of the day, you're responsible for it as well. So you got to keep that in mind. But yeah, probably crypto.com would have it. Let's look into it shortly. But Tristan talked a little bit about this. Circle going to go ahead and do an IPO. Yeah, that's pretty interesting. I mean, I almost sometimes feel like we're going backwards. Is like we're doing this whole entire crypto thing and DeFi to step away from traditional finance, but then we take 20 steps back and then we go back to traditional finance to ask for money. So I really do not get it. I really do not. I mean, this is great. This is definitely going to make, this is definitely going to bring in more awareness. People are going to be able to hold and bet into Circle. I mean, I would definitely buy some, maybe not initially, but I definitely will be a holder of Circle because basically it's also backed by Coinbase. So for me personally, I think this IPO is going to be nice for you to have exposure on your stock portfolio. How do I feel overall? I don't know. I just feel like we're taking steps back. I thought the whole entire point of what we were doing here with blockchain in general was to bring in traditional money into the space. But it seems like in order to do that, we need to take 20 steps back and then go forward. And that example is like Bitcoin ETFs. It's like, I guess if you do want that exposure to more people, to retail, it's a lot easier to go ahead and put up your Charles Schwab account and buy an ETF, as opposed to going on the blockchain, trying to figure out how to buy it, or going on a centralized exchange and being a little bit more confused, right? Because you might be already used to traditional finance. So I don't know. I'm not sure if you talked a little bit about your opinion on this, but I would definitely like to hear your take. Would you be the one buying the IPO for Circle?
Yeah, I won't be buying it off the bat, that's for sure. IPOs don't have a good track record of making gains right off their IPO date. Maybe in a quick trade, but not like long term. Like Airbnb, for example, quick pop off their IPO and then it crashed.
Yeah.
And it's now finally, after a year or so, getting to where it was at the IPO. So I'm not buying it off the IPO, definitely. I understand why they're doing this, why Circle does it. A, make more money, get more money into the company. But B, you can get into the retirement portfolios. If they're not going to get on the S&P 500 if they do a token. So that this is the way to be on. Get in the S&P 500.
They're more than likely going to be listed on NASDAQ.
Yeah, NASDAQ and it's. I think it was New York Stock Exchange, but you'd think it would be NASDAQ.
Interesting.
Yeah.
It's going to be interesting to see where things go for that. But yeah, I'm also not looking to go ahead and touch that coin right away or that stock.
Nope.
No IPO usually does really well. And it's all due to teams selling their stock options. So they're holding on to probably a decent amount of stock options. Millionaires, billionaires will be made on the IPO.
Yeah.
But one of the biggest news too as well. So Trump's team is now in the business of mining Bitcoin. You guys heard that right. So Hut-A, which is a Bitcoin miner that you could go ahead and actually find on the stock market already. They're already public. They mine Bitcoin. Basically, in other words, I don't want to use this terminology, but basically mining Bitcoin is like almost printing money, but not really. I'm sure Tristan could explain that a little bit more simplified. But yeah, so Hut-A is going to go ahead and help Trump's team pull this And that corporation is going to be called American Bitcoin Corporation. That's going to be Trump's family-backed crypto mining operation. Hut 8 will be owning about 80% of ownership, and while Trump's family owns about 20%. So it looks like Hut 8 is definitely going to be the one leading everything, taking care of everything, the infrastructure, everything. It just seems like it probably looks like Trump's team is going to be the one helping them get this IPO and get more investors and get more money into the platform. It's definitely going to be huge. I mean, I wonder if them doing this is going to have a competition with other miners, because I do believe Hut 8 was actually pretty profitable, right? If I'm not mistaken. I think they were probably one of the very few mining companies that were not in the negative. And they were actually in the positive. So if this is the case, it's going to be interesting to see how Riot, Mara, because those are the leading crypto miners at the moment right now. Mara, for some reason, has always been the one leading and always doing a lot better. I think it's because they have no debt. I think that's what you mentioned last time, right? But yeah, it's really interesting to see where things go with this. He will be going public as well. I will also be holding this, but not initially as soon as it goes live. I'm probably going to wait it out a few months, see how things go, hopefully crash 60 to 80%. Probably this IPO, I don't know. Depending on how the market goes, I might go ahead and consider, once I start to see Bitcoin do very well, to jump into these. Because keep in mind that these platforms, whether it's Coin, maybe Circle, I could definitely for sure say crypto mining companies in the stock market it's a leverage bet basically for Bitcoin. And it's not really a leverage bet, because unless you're using options trading, then it is a leverage bet. But these stock companies, if you're holding on to them, it's like you're basically betting on Bitcoin doing very well. And if Bitcoin performs very well, usually these crypto mining companies do excellent. They'll go up and give you 4, 5, 6, 8x returns literally in like a year, as Bitcoin is making new all-time highs, which those returns are unheard of in the stock market. So getting those kind of returns in a retirement fund, 401k, whatever the case is, Roth, could definitely have some exposure to Bitcoin. So I think it's really great. What do you think about this, Tristan?
Yeah, no, I'm always mining. Bitcoin mining was kind of how I got into crypto, so I'm always a big fan of it. And to kind of give the viewers a bit of an explanation of what it is that whenever you're sending crypto, there's gas fees. So that's like that's a little bit of money that you have to pay to actually send the crypto. Those gas fees, in the case of Bitcoin, go to the miners, and it's just a little token of what they get for verifying the network. So every transaction has to be verified, and that's what makes Bitcoin strong. So the miners are getting these gas fees, and also when they do verification, they're also rewarded with a little bit of Bitcoin that is brand new. So Bitcoin that hasn't been on the blockchain yet, and that's where they're getting a lot of their funds from. Uh, they get more from the reward than they do get the gas fees, actually. And you probably have heard in the past the word the halving. And what the halving is that reward that miners earn for being for verifying all the transactions on the blockchain. That reward gets cut in half. So if it was 4, after halving it's 2, 1.5, et cetera, et cetera. That is what Bitcoin mining essentially is. But no, Hut 8, big fan. It's actually a Canadian company, and they are, like John said, a good leverage play on Bitcoin itself. Kind of like buying a gold miner company, like a gold mining company. When gold goes up or down, it doesn't move too much. But those mining companies, they will swing 50 to 100% during a gold bull run.
It's really interesting. I never knew Hut 8 was Canadian. Like, I wonder how they're taking it with the whole entire tariffs. like, think about this: a president talking about tariffs, going kind of at it with Canada, Mexico, and China, and then doing IPOs with Canadian companies. It's pretty interesting. It's kind of funny. So you kind of almost see the narrative of what Tan and Salim they were talking about today, right, in the private community. For all of those that don't know and weren't able to join it, I'll basically go ahead and slightly break it down a little bit and give you guys a sneak peek. But this is a lot of the information we already talked about, though. They're saying that this could just be a move that Trump is doing to push us into getting those rate cuts. So it's probably nothing personal as he makes it seem like with these other countries. I think the last thing he wants to do is start a war. But those actions definitely almost feel like that's where things are going. And I think that's why people are freaking out. People are freaking out because they're like, oh, snap, like we're going to go to war with all these countries now. And it's like, who's going to be there to back us? Because we're kind of almost attacking every country, right? So that's why, in my opinion, I believe that this is the reason why we're seeing the market react even more aggressively because of that reason. People are like, what if we go into war? And they get mad off of this. But then you're seeing, like, I'm glad you didn't mention that. I didn't even know. Hey, it's a Canadian company. So, like, how would a company like that take those tariffs, right? So he's still doing business with them. So it looks like definitely could be a business tactic that he could be pushing. Hopefully we're right. Hopefully we could go and get out of this. I mean, it would be unfortunate that the bull run ends. It'd be definitely very disappointing, to be completely honest, because the runs that we get in crypto are amazing. It's the euphoria you get, the feeling you get after like all these ups and downs in the market. You buying a dip, dollar cost averaging finally pays off. You know, you're up hundreds of thousands of dollars, maybe millions. Now you could go ahead and relax for a few years, maybe for 2-3 years. Let the bear market do its thing, enjoy the money for a while. But yeah, that's the best feeling, and that's what I want all you guys to go ahead and feel. So that's why I would be personally disappointed if we don't have that again, as we all expected, because that's a feeling that you can't describe. I think that's probably like the best feeling. I would say, like, even till this day, like when things like this happen in the market, whether it's a token you've been investing in and you finally get what you've been expecting on this token, even though during times it looked very, very difficult and hard, your hard work definitely finally pays off. And that's like the best feeling ever, in my opinion. I guess probably the best thing you could describe it to is like starting a business and your business struggling, you know, up and down, and then comes a turning point where now your company's doing very well in revenue. It's in a feeling that's very difficult to explain, in my opinion. I'm not sure if Tristan could probably touch up on that, but even till this day, I don't get bored. I don't get tired of that feeling. That feeling is so unique, and it's great.
Yes, the problem with that feeling though is very addictive, and it makes it very hard to sell sometimes. When when you are in that bull run and you're at the peak of it, you know, it is a very emotional feeling. But usually when you have that feeling, it's a good time to sell. But yeah, when that circumstance happens, you should sell. Like that is probably either close to the peak of the market or uh,
The peak,
the
or
peak,
the peak.
or the peak. Yeah.
Yeah, it's a very unique feeling. But I think over time you start to see it too, because once it starts to come in, like, you know, the red flags. Like, I don't know. People are getting too excited. Let me go ahead and start taking profits now.
Yes.
And if you notice, we've been pretty bearish since like early February, man. Like ever since we really started pushing the stream, I don't think we were super bullish. There was times where I was like quite bullish, where I was like, you know what? Things could look good, but overall I've been negative and bearish. I've been saying this for like the longest, even before rate cuts happen. I was saying I'm not looking to go ahead and buy anything until possibly February, or even the way up to May. Um, so I already expected the market to have this correction because of the euphoria we had during the time. Like, we had every positive reason to go up. And to me personally, I was worried because I was like, if we go up, we are definitely going to have a really bad recession. Like, things are not going to look good. Like, we're going to probably have a bull run for like 1 or 2 months, but the after effects going to be worse. And there you go. I actually predicted the US 100. I mentioned that I was actually going to break down, and this is exactly what happened. Literally at the range that I talked about. So I'm going to be looking at this very, very closely to go ahead and see where things are going. But this is one of the main reasons why you guys always want to wait for confirmation. You never want to go with your feelings. I'll tell you this, emotionally during these last couple of weeks, I was almost very close just to throw money into the market aggressively. Like I was just going to start throwing money back into meme coins and altcoins. And I was like, you know what? There's a really strong resistance right here at this $20,000 range for the NASDAQ. I mentioned how there's a high probability we'll get rejected between there or right here. Actually, it was actually right here because we didn't have this resistance there yet. And I mentioned how our support would be another additional 6% drop. And look at this drop that we're at. We're at a 5.16% drop. So I've been warning all of you guys for the past over a month. So has Tristan. We've been mentioning how stable coins. And I would never, trust me, I would never push stable coins. I love taking risk. I'm a risk taker, but I also know when it's time to pivot. And when I started seeing the signs that it was time to pivot, I decided to go ahead and do what was right, not what I wanted to go ahead and do. Because usually when you want what you want to do is definitely not going to be the play. Because if you were to tell me emotionally what I was thinking during this stage, we saw the market quickly rebound, almost like a V-shaped recovery. People are like, oh, this is it. The bottom is in. Let's go ahead and buy. And I was like, I don't know. I don't feel confident. I know it's going to drop another 6%. It's going to drop another 6%. And we've had that drop, right? So emotionally, I wanted to throw money, but I knew that you need to get confirmation with everything that you do, especially when it comes to investing, especially in the way that I am. I'm more analytical. I'm more of an analytical person. So I like to look at things visually. And for me, I knew visually, I told myself in my mind, and if you guys remember, I mentioned how I said, I am super leveraged. I took on very aggressive, high risk these last couple months, expecting the market to take off. Not saying the market can't take off. The market can still jump 30, 40% tomorrow, right? But I did mention I'm so exposed that even if the market does reverse, I'm good. My portfolio is going to be really nice packed. But if it doesn't, it's okay, because I also knew the risk ahead of time. I knew that the money I was going to throw in, I'm not going to expect no kind of return anytime soon. It was more of a longer term, 1 year, 2 years down the line. It wasn't money that I was planning to do anything with. Now, I do want to tell you, I do want this bull run to happen quicker because I want a new car. But that's the only thing. But besides that, I wasn't counting on that. You know what I mean? I was like, okay, this will probably be car money, a new car money, if the market goes in my favor. But if not, if it doesn't, I'm just gonna have to go ahead and wait, right? So you have to go ahead and put these things into perspective. Wait for confirmation always, and even then, this could probably not even be the bottom. For all we know, we could probably even come down here, and honestly, that would not be good. But that would be a massive discount. So basically, to everyone that might be like, John, I have no idea what we just said. To keep it very simple, is a recession like what we're seeing right now is what was needed for the market for it to be healthy. Like this correction that we're seeing is needed. This correction was needed. It was either going to be a man-made correction or it was going to be a correction that happens because the market kept on going up. And basically the correction that we're seeing right now, and we'll see what Tristan thinks, is like the black swan event that we saw during the pandemic. Even then, the times during the pandemic, as things were rising, the market was reaching that overextended zone too. So we had to get that correction in order for us to continue to go up. And this is the same exact thing that we're seeing here too. We needed a correction in order for the market to continue to go up higher. So even though short term, we're getting a lot of pain, on the long-term perspective, 2 years down the line, year and a half, this is really good. This is the opportunity that we want. And this is the opportunity that now you could go ahead and jump into, get these assets in a discount, and buy a lot of these altcoins at an 80% discount. They're literally at their lows before they took off. So this correction that we're seeing is actually, it was actually needed. Now, I think personally, it was it was manipulated, in my opinion. I would say that it was a force, and you can see the signs. I mean, it's almost very, very clear. The signs that we're seeing, yes, the economy is looking terrible, to be completely honest. But the stand that we're taking right now, it's like what Trump is doing, he's doing it so aggressive that we're going to feel it so fast, but also like longer term, we're going to be glad that happened because it's not going to be prolonged. Because what they have been doing all these years is prolonging the effect of a market correction of like what we're seeing right now, right? So this correction is actually very, very healthy, guys. Believe it or not. And this probably would have never happened if what we're seeing in the market would have happened. I mentioned to everyone, AI is going to be a bubble. I mentioned this for the stock market. Watch out, AI is going to be a bubble, and look at that, it popped. Not saying that's over. I think there's still a lot more room to go. But yeah, this correction was needed. I think this is healthy. I'm actually happy, believe it or not. Like, yes, my portfolio is down 90%, but I'm also thinking I'm going to get a 90% discount on all these assets. And that's the kind of mentality we should all be having when we see these opportunities in the market. Now, one thing I do want to say before I pivot over to Tristan is even though this could be an opportunity, it could also be a bear market, right? So now we also need to get a confirmation for that. So we need to get also a confirmation. Is this a bear market or is this a correction? And for me, that's what I'm waiting for. I'm just putting my money to the side right now, patiently waiting. Once I start getting the signs that I personally feel comfortable with, I'm going to go ahead and start deploying money aggressively into the market. Now, I want to see Tristan's point into this. What are your thoughts about what we're seeing in the market? Not just crypto, the stock market as well.
Yeah, and I think from there I'll talk about the economy and as a whole, the U.S. economy. At the end of the last administration's term, of course they pump a lot of money into the market through the government. So lots of bills, lots of spending, and that's to kind of juice up the economy, make it look good, even though the underlying mechanisms might not be that great. At least it looks good, and then they can, that makes them look good for the election. And then now it's part of what Trump is doing now. He's taking that what may not be it might be not be real growth, like that's juiced up fake growth out of the economy, and kind of what we're seeing here with this downtrend. But it's also not a terrible thing because a lot of the people who voted for Trump are like Gen Z or some millennial or people who don't have a ton of assets, who are, just getting started. So I think we do still have a few. There's another shoe to drop here. The market will probably move down a bit more, but we might also see some movement in real estate as well, because the real estate market is still very high. And I know Jon mentioned in our private group yesterday that the real estate, that the mortgage delinquencies, so people missing payments on their mortgage, is at an all-time high. It was close to like that 2008 level. So things are looking interesting in the U.S. market at the moment. So I think we do have a little bit of room to go down still. I have my private group call in about 3 minutes, Jon.
You can go ahead and end it, man. You just go ahead and wrap things up.
Is there anything else you want to say?
No, that's all for me.
Alrighty, everyone. Well, it was good. Thank you all for joining in. As always, I appreciate it. Next week, where'd my face go? We'll have 2 more podcasts, one on Tuesday and then another one at the same time today on Thursday. So yes, thank you for tuning in next week. I hope you're walking away with some clear strategies and insights to push your DeFi journey forward. Remember, DeFi is evolving fast, and staying ahead means taking the right knowledge. If you're ready to dive even deeper and want to build your own DeFi success, check out our DeFi Masterclass. The link is in the description below. In the training, you'll receive clear hands-on strategies to maximize returns and manage risks, and truly make the most of what DeFi has to offer from our CEO, Tan, and all the wonderful analysts and mentors in our company. Make sure to like and subscribe and hit the notification bell so you don't miss next week's live episode. Until then, keep learning, keep growing, and I'll see you right here next time on Decentralized Masters.
Later, everyone. Take care, guys.
Bye, everyone.